Investing does not have to be rocket science. At the end of the day, it's you put money into the stock market and what comes out is super mega riches, right? Well, not that simple. But what I will say is you don't need a PhD and you don't need a Wall Street job to understand how to invest into the stock market. And I'm about to show you the easiest, most beginner-friendly way and most pro-friendly way to invest into the stock markets. And that, my friends, is an index fund. So let's dive in. What's up, guys? This is your boy, Kenny Finance. Welcome to the channel where we talk about all things money. If there's money to be budgeted, saved, invested, we talk about that on this channel. So I appreciate you guys checking out this video. And today we're going to talk about index funds. That is right. Those powerful basket of stocks that is guaranteeing everyone Wall Street riches. Just kidding. But an index fund is an important concept to understand if you want to understand how to have a solid and resilient investment portfolio. And to give you guys a little bit of preview of what we're going to talk about in this video, we're going to outline 1, what an index fund is, 2, why you should invest in them, 3, historical performance, and if they're going to be actually good going forward, and number 4, as a little treat for my subscribers, and if you're not, you can press that little subscribe button down below. I appreciate you. And number 4, we are going to touch on my favorite index fund and the fund that I've been putting tens of thousands of dollars into every single year. All right, so let's dive in. All right, number 1, what is an index fund? An index fund, the best way to describe it, is a basket of stocks that fit a specific type of criteria. Now that basket can be anything. It could be a basket of technology stocks, oil stocks, consumer stocks, all stocks, you name it. It is essentially a egg basket of the best stocks in the world that you want to get exposure to that you can buy with one single share. So instead of going on Robinhood and trying to buy a share of 500 different stocks on the S&P 500, you can literally go to an S&P 500 index fund and buy a piece of all 500 companies. And the beauty of that is that you are tackling one of the most important things to do when it comes to investing, and that is diversifying. You should never put all of your eggs into one basket. And the key to having a resilient portfolio is to have a diversified portfolio. And what other way to diversify than to buy a basket of stocks? And another beauty of it is that an index fund is managed by a professional investor that did all the hard work to pick the stocks that go into that specific index fund. So it saves you time because you can just put money into that index fund and they do all the hard work to pick the things that go into that specific basket. So think of it as an index fund is a basket of stocks to diversify your investments. Easy as that. Now the question is, there's thousands of index funds out there. How to pick the right one? Now, the reason why you would pick one is you want diversification, but what are you diversifying into or away from? Now, that is based on your preference as an investor. And the way how I encourage folks to decide what they want to buy index funds of is I want them to think about where do they have the most conviction? Do you have conviction in all of the stocks in America? Okay, buy the S&P 500 index fund. Do you have, conviction in just the big companies or just the small companies? Do you have conviction in growth stocks, value stocks? Do you have conviction in technology or industrial stocks? Whatever that may be. Do sort of like the desktop research to have a sense of where's the world going, what type of companies are moving the world in that direction, and then buy an index fund that has exposure to those type of companies. And that is a very simple, easy recipe to buy something that you have conviction in. And what are the different brands that offer index funds? The best in class ones is 1 Vanguard and 2 Fidelity. Everything else is kind of almost equivalent, but if you want a blue chip name in the index fund space, stick to Vanguard or Fidelity. So that outlines everything of what an index fund is, what kind you can buy, and what are the different ones that are reputable to actually invest in. So moving on, why invest in index funds? And for this, I want you to ask yourself the very, very simple question. How much time are you working with? How much time do you have to spend studying a stock, studying an industry, understanding a product or service that a company does, understanding their financials? Like, how much do you actually have after working, going to school, working out, spending time with friends and family, cooking, cleaning, all that jazz? How much do you have to spend on picking the right stock to invest in? Because that is a very, very, very time-consuming exercise. There are folks out there on Wall Street working at hedge funds, private equity funds, spending 80 to 100 hours per week, understanding a sector, speaking to customers, understanding unit economics, understanding what makes a stock go up or down. Like, that is their full-time job. That is their livelihood, to pick stocks. You have to ask yourself, is that a lifestyle that you want, to spend a bunch of time finding one specific company to invest in? And the other thing is, once you find a company, you got to have the gut and the resilience to go with the ups and downs and hold it long term. So ask yourself, do you have the time for that? Now, this whole 80 to 100 hour mess of understanding a stock, is actually true. I lived it. I spent almost 10 years on Wall Street in private equity, working at the top firms, understanding how to diligence a company, diligence industries. I know this stuff in and out, and trust me, it's not for the faint of heart. All right. So you have to ask yourself, do you have the time to be an active investor like the pros, or is it better for your lifestyle to be a passive investor? Now, if you want to be a passive investor, the best approach is to just invest in index funds, invest regularly, and let that thing sit for a long period of time. But if you do have the time and the interest, and you want to be an active investor, one, good luck. And then two, be prepared to really understand all the ins and outs of buying and understanding a business. Because when you're an active investor, like the pros, like how we do it, you're not just trading based on a stock chart. We don't do day trading. We are trying to understand the best company and the best industry so that we can make 5-10x our money. That's the focus. But if you're a retail investor simply investing for the long term, trying to build wealth and trying to build a retirement, I highly recommend that you just buy index funds and then go spend some time with your dogs, your family, your friends. All right, life's too short. Now, performance. How have these things performed? Well, it's funny because all the folks that are out there working professional Wall Street jobs, you may think that all of these pros working on Wall Street are making so much more money than index fund investors. Well, there's a kind of a scary stat, and that scary stat says that 85% of actively managed funds, aka hedge funds, have underperformed index funds. That is right. Those folks that are out there working 100 hours a week trying to understand a stock have not done better than me and you that bought index funds and let that thing sit. So that shows that performance-wise, it is better to go with an index fund because it's diversified, it's consistent, and it works instead of trying to spend all your time being a stock picker. And if you want to see a specific performance of an index fund, let's check out Fidelity's NASDAQ Composite Index. This is essentially tracking all of the companies in the NASDAQ. And this has had an average 10-year return annually of around 16%. That is insane. And it just goes to show that buying an index fund is one of the smartest things that you could possibly do. And don't take my word from it. Take Mr. Warren Buffett, literally the greatest investor of all time. He says, in his view, for most people, the most important thing that they could possibly do is to buy an S&P 500 index fund. Now, you can replace that S&P with whatever you want to call it, but I think the words are still true. The best thing for a regular investor that they could do is to buy an index fund. So as promised, this treat that I have for my lucky subscribers is my pick for the best index fund that fits my portfolio, risk tolerance, and my preferences and where I have conviction going forward in the markets. And for me, I'm a big fan of technology. I think that AI, enterprise, cloud computing, all this stuff is drastically going to transform the world. But do I know what exact company is going to change the world and what time and how and when? Not really. But I have a view that technology companies broadly are going to do very well in the stock market, and I want to get exposure to those. And my favorite index fund is VGT. This is Vanguard's Information Technology Index Fund that tracks all of the best technology companies in the US. And let's just unpack the performance year to date. VGT, year to date so far, ever since January, has had a 20% return. Over a year, it's up 31%. And over 10 years, this thing is up 450%. That is insane. That just goes to show that technology is booming. Like with AI and all this stuff coming out, like technology is going to exist today, it's going to exist tomorrow, and I'm a young millennial, so I believe in it. So I'm going to put my money behind it. And the best way I can put my money behind it is to buy a technology-focused index fund. So I highly recommend that if you have a thesis focused on information technology, etc. So buy an index fund focused on that. But if you're not as much of a gung-ho technology guy, there's other stuff. If you believe in financial companies, there's a financial ETF. If you believe in industrial companies, there's an industrial ETF. If you're a big fan of climate tech and you think renewable energy and other ways of protecting the environment is going to be a really, really, really sound way to invest and put your money behind, there's an index fund for that as well. So definitely check that out. All right, guys. So that summarizes the #1 most effective strategy to investing in the stock market, and it's just buying an index fund. So do the homework and figure out where you want to get exposure to, and then find an index fund that tackles that exposure. And if you guys enjoyed this video, make sure you guys smash that like button down below. It really does help the channel. And leave me a comment. I would love to hear which index fund you guys are buying and why. So leave that comment down below. And look, I always say this, invest regularly, invest often, invest as much as you can, and let that thing sit, because the key to all of this is allowing compound interest to make your money work for you. And if you want to understand more about how to have $1 million investment strategy, check out this next video where I unpack everything as it relates to index funds, investing, compounding, all that jazz in the next video. So I appreciate you guys rocking with us. I'll catch you in the next one. Peace.